Do you have good credit and want to buy a RV like a toy hauler or a motorhome, travel trailer, fifth wheel toy hauler here in 2024? This is the right video for you. Welcome to HBRV Lifestyle. They call me the Honey Badger because I give it to you straight and transparent about the RV business. And this is your guide for buying a RV with good credit. This video will be broken down into 3 sections. Section number 1, talk about how lenders define good credit. Number 2 will be about the loan terms and interest rates here in 2024. And number 3, how a lender determines how much you qualify for and how much down payment will be required. How lenders define good credit in the RV industry. Now, you're probably wondering, why does he use air quotation marks? Well, the reason being is good credit in the auto industry is very different from good credit in the RV industry. Now, when we talk about RVs, I'm talking about toy haulers, fifth wheel toy haulers, travel trailers, fifth wheels, motorhomes, pop-ups, teardrops, etc. Okay? Disclaimer. I do not work for a lender, so I do not determine approvals, interest rates, terms, etc. These are guidelines and rules, and there are exceptions. They are few and far between, and we will not talk about the exceptions in this video, strictly the guidelines and the rules. Okay? Now, I have worked for an RV dealership or worked for RV dealerships for almost 15 years. I spent 8 years as a finance manager, sales manager, general manager, etc. I've worn every hat except for RV dealership owner. When it comes to credit score, good credit is 740 or higher. That's right, 740. Okay, plus. Now, every state and every lender uses a different FICO score for the most part. Some states use Experian, some Equifax, some TransUnion. Now, I'm going to exaggerate a little bit and say there's 200 different models of credit scores. I've seen folks literally show me on their phone on Experian.com that they are a 725, and when I run them through a bank, they run at an 803 or 804. Now, that's extreme, but I've seen it. And I've seen the opposite. I've seen people show me that they're a 770, and when I run them, they're like a 699 or 701. Okay? Now, if you're wondering, well, I'm a 720. Okay. 680 FICO scores to 739 are considered fair credit. And I actually have a video for you guys. If you go to the description box below, I actually have a link to a video I did on that. So if you want to check that out later, you can. Or if you want to check it out now, you can. Okay. The other thing that is a determining factor is you might be a 770 FICO score, but you have a bankruptcy. You have a foreclosure. You're 30 days late on your mortgage, etc. So you have to have clean credit. Sorry about the helicopter in the background. So no bankruptcies, no foreclosures, no repossessions, no medical collections, no collections of any kind. You have to have clean credit. Now, let's say you're 8 years clear of your bankruptcy, but your BK is still showing up on your credit report. It doesn't count. So as long as it still shows up on your credit report that you had a bankruptcy, you do not have good credit according to the majority of lenders. In most cases, you're going to be considered fair credit. Okay? In some cases, you're going to be considered subprime or bad credit. That's all more complicated. I'll put a couple videos linked below to give you some guidelines on that stuff. Okay. Now, the other thing is credit card debt. You could be an 800 FICO score. Now, I'm not sure if it's really possible to do this, but let's say you're an 800 score, but let's say 5 of your 10 credit cards are maxed out. They're going to probably consider you fair credit, not good credit. So anymore, credit score only determines a portion of what a lender looks at for good credit. Anymore, there's all kinds of algorithms out there that take credit score, credit card availability, what kind of loan you had, just all kinds of factors, whether you're retired, whether you have a job. There's all kinds of artificial intelligences out there and algorithms that make those determinations. But these are pretty good guidelines. So let's give you an example. Let's say you're an 800 FICO score and you have 80% available on your credit cards, meaning you only have 20% usage, and no bankruptcies, no foreclosures, no late payments, no collections. You're considered good credit. Let's say you're a 755 score, same scenario, you're considered good credit. Now let's say that you're a 780, but you had a bankruptcy 7 years ago. You're not considered good credit. You're considered fair credit, more than likely. Okay? So hopefully that helps you out, because the next thing is how interest rates and terms are determined. RV loan terms and interest rates here in 2024. Loan terms are really easy to understand. If you're financing under $10,000, you will generally get a 5 to 7 year loan. If you're financing between $10,000 and $24,999, you will get between a 7-year loan and 12-year loan. If you're financing $25,000 or more, you can get a 15-year loan. And if you're financing over $50,000, you can get a 20-year loan. Now, those are the guidelines. There are a couple of exceptions here and there, but for the most part, that's set in stone. Okay? Now, when it comes to interest rates, that's very different. Okay? So there are 3 things that affect an interest rate on an RV loan. Number 1 is the dollar amount financed. If you're financing $100,000, you're going to get a better interest rate than if you finance $10,000. Number 2 is the term of the loan. The longer the term, generally the lower the interest rate with the banks. With credit unions, it's the opposite. The shorter the term, the lower the interest rate with the credit union. I'll repeat that one more time because that's a little confusing. With banks, the longer the loan goes, the better the interest rate. With credit unions, the shorter the term, the better the interest rate. The third thing that affects an interest rate is the percentage of down payment. So there's a balancing act between the dollar amount financed and the amount of down payment. So let's say you put 10% down, you will get a higher interest rate than you would if you put 25% down. Okay? And the last thing is your credit history / credit score. Obviously, if you're an 800 score, you're going to get a better interest rate than if you're a 740 score. Now, I've seen some weird stuff happen with that, but that's a pretty good set in stone guideline. Now, the interest rates that are running right now are between 7.99% and 9.99% with good credit. Now, I've seen some folks qualify for a little bit less and some folks qualify for a little bit more. And if you saw my latest video on interest rates starting June 1st, 2024, we're probably going to see a small increase from lenders on interest rates, probably around 1/4 to 1/2% more. Okay. Now, if you have any questions about that, my email is in the description box below. If you want more details to it, send me your situation and I'll get you an answer as soon as I can. How lenders determine how much money you qualify for and down payment requirements. Bear with me on this section. It may get boring and there's a lot of context, but if you pay attention, there is a payoff to all of it. Number one, lenders look at installment loan history to determine how much you qualify for. Not your highest credit card limit. They look at car loans, motorcycle loans, past RV loans, boat loans, etc. Stuff like that. Okay, not student loans, not credit cards. Okay, they also look at the length of the loans. So let me give you some quick examples. All right, let's say we have someone with an 800 FICO score and they have 2 car loans under their belt. One that is 6 months old and was for, let's say, $70,000. But you have a second auto loan that you made 36 payments on so far, and it's a $30,000 loan. The lender will more than likely use the $30,000 loan as the benchmark. Because reality is, a lender wants you to have an installment loan for at least 24 months. Now, they don't care if you pay it off in 24 months. You could have like a 7-year car note and pay it off in 26 payments, 26 months. And they're good with that. They're like, that counts. But it's the folks that, I'm going to take out a car loan for 6 months and pay it off. They don't look at it that way. And the number one reason why is because you're buying a toy. In their mind, break it down as simply as possible, you are buying a toy. And during economic bad times, like the Great Recession in 2008, 9, and 10, the first thing that people let go of is the toys. So they're very careful about those things. The second thing they really will determine is they're going to combine, more than likely, your longest and highest car note, and if you have a mortgage. So when you start getting into jumbo loans, they'll start looking at mortgages. And we'll get into jumbo loans in a minute. Okay. The second thing they look at is they look at how many car loans you have open and for how long. For example, okay, if you have, let's say, 5 open car loans and 3 out of the 5 of them are very recent, you're not going to qualify for as big of a loan as you would if you only had 2 open car loans. So again, that carefulness goes along. So here's the best example period. You got a guy that's a 760 FICO score, walks in, no bankruptcy, none of that stuff. He has a $50,000 truck loan and a $40,000 Mercedes loan. He's paid on them for at least 3 years. They will more than likely go 30% higher than what that highest loan was. In this case, you'd probably qualify for between, let's call it $75,000 and $80,000 RV loan. Now again, there's exceptions, guys, as I've said, but they are few and far between. Another good example, 750 FICO score, 1 car loan. The car loan was for $20,000. It was, you paid on it for 2.5 years. The banks or the credit unions will probably give you $25,000, maybe $30,000 in some cases. So they really, you could have an 800 FICO perfect credit and not qualify for a $100,000 fifth wheel loan. But you could be a 745 score and still qualify. So it all depends on how much you've borrowed. And that's where down payment comes into play. Down payment percentage is determined by the dollar amount you're trying to borrow. There are zero down programs. Now, I have not gotten a zero down loan approved with any credit union or lender in about 2 months. but they are there. Okay, and they do them up to, in general, up to $45,000. Now, that's a case-by-case basis. I've seen a lot of folks that get counteroffered that have absolutely perfect credit. I send it with 0 down, it gets counteroffered at 10% down. That's the general rule of thumb. In general, the majority of lenders want you to have a minimum of 10% down, even with outstanding credit. Again, this is a toy. This is not a need. You go down to a car dealership to buy a Toyota Camry, you need it to go to work to make money for the household. This is a vacation mode or a camping mode type of purchase, right? Okay. Now, in some cases, when you reach certain dollar amounts, the banks start wanting 15 to 20% down, because as you climb the ladder, as you get more and more expensive, they want more skin in the game, even though you have outstanding credit. And the last thing I'm going to talk about when it comes to the down payment, and then we'll get into jumbo loans, is used. Used RVs are going to require more down payment than new RVs. Now, I'm not necessarily talking about the dollar amount, because obviously if the motorhome is cheaper, the dollar amount of down payment will be less. But it's the percentage down. The majority of lenders want you to put 15 to 25% down on a used RV. That's toy haulers, travel trailers, fifth wheel toy haulers, etc. Now, I'll say it one more time. I know it probably sounds repetitive, but there are exceptions to these things. They are few and far between. And the reason why I say few and far between is because, again, like I've said prior, this is a toy. Now, when it comes to jumbo RV loans, we're talking about loans over $100,000. You want to check this video out right here.